Hello and welcome to another update video about Bitcoin. Yeah, it looks as if we all get lower prices. The yellow scenario is still the preferred one, and we are now approaching that $63,290 level, which is the 38.2 retracement. Yeah, someone asked me in the previous video in the comments if I'm drawing the fibs correctly. Yeah, they are drawn correctly. They have to be drawn from the low of wave 1 to the top of wave 1. So you have to make sure you pick the absolute low to the top of the wave 1. So the person who commented, I think you have slightly different levels. So first thing you need to check is if you're on log scale or not. If you're not on log scale, go to log scale. Very simple. Mistake that many people make. They are not on the log chart, but you should really only chart cryptos on the log chart. It doesn't make a great difference on the smaller time frame, but it still is the standard for more volatile assets to use the logarithmic chart. For more info, details about how to draw these fibs and which fibs to use for which wave and everything, consider checking out our membership. Lots of live stream tutorials, hours of recorded video live stream recordings really about different topics, including fib levels and how to draw them, what they are, what Fibonacci numbers are, and so on. It's all there for anybody who wants to learn. But if you don't want to learn, that's fine as well. Just stay here on the YouTube channel, enjoy the content. And again, thanks for your support, all of you. Now we see a bit of downside today. We're now at 63,800. I started to add my first Bitcoin spot position again after taking profits in this region up here. Reason why I'm starting to buy, even though I still expect lower prices, is because this B wave could start soon. And if it's aggressive, I might consider to take some profits again, but also because the price is now back below the level that I last sold my last batch for. I think it was around 64,500 or something. Something about, I don't know. It was anyway, the price is now below that level, so therefore I start adding again because we're in a bullish market. That's the interpretation, and we want to take a look at the structure. So the yellow count is still the preferred one. In the yellow count we have a 5-wave move to the upside, as mentioned before. By the way, if you're interested in the daily chart, check out the last video. I covered the daily for more context. This here is just an intraday update, just a 1-hour chart, 30-minute chart maybe. And I only made that video today, so it's still up to date. And from here up here, we're watching for an A, B, C structure to unfold. The support area is between 63,290 and 56,775. And from here, a third wave rally should unfold. What I need to do is to just shift these to the upside here, to the side. And that, so 5 waves up, 3 waves down, and then actually we should see the next waves to the upside from there. Important is that the 56,775 level needs to hold. Any break below it, and I would turn more bearish. It would definitely mean I have to be more on the side of caution. But until then, I plan to add positions according to like a triangle strategy, just pyramiding in basically. That doesn't mean I go all in up here. It's literally a tiny position because I have to make sure that I buy a little more here, a little more here, a little more here, a little more here. It might never get to that level down there, to 56,775. That's fine. Why does it need to get there? You know, I don't need a full position. I've got a healthy core position from the bear market. If it turns around early, fine. You know, it goes exactly where I want it to go. So this is sort of how I approach it. The micro patterns, I think, usually are not worth stressing about, not in corrections. So stay on the larger time frame. Consider where the trend is going. The trend is up. We're now in a pullback in an uptrend. We are pretty much at a point where a B wave should start. An internal B wave already happened. It was less aggressive than I thought because, well, you know, you never know with B waves, right? That's what I say all the time. They're the most difficult waves to predict. But typically a B wave would have been a bit more aggressive. If it's an internal B wave, that means in turn, maybe this yellow wave A to the downside, which is the A wave of the wave 2, is a 5-wave move actually. That means we have to consider waves B and C to form overall here a zigzag pattern, with standard resistance between 66,754 and 68,643 for the B wave. This will move slightly if the price goes down lower. I will keep that updated on our live charts. And then we should still see a C wave down. But I mentioned it earlier today in my update that we are likely going to see this correction go into next week, at least. Because if this is only the A wave, we would expect the B wave and the C wave. Now, it is important, I think, to mention that it's technically possible that this decline completes all of wave 2. It is possible, which is another reason why I started to buy. So I'm basically either watching for a B wave or the start of a third wave to the upside. But the white count is the alternative. So it would, for me to really consider the white count with that shallow wave 2 more likely, I need a break at least above resistance, 68,640. And then in my earlier video today, I added let's say the nearest resistance to the chart. I can probably take that off. This was designed for an internal, basically for the internal decline here, and I highlighted, look, it takes a break above 66,166 to indicate the B wave has started, but really, so they are so close together. I think I'll take that off, and it's all about this resistance area. No evidence wave B has started. Looking at the 1 hour chart, we are and have been now oversold a few times on the 1 hour chart, but it hasn't really started a proper B wave bounce yet. Looking at the 4 hour time frame. Just waiting for the RSI to reset. So it is also oversold. So it is, you know, even if we go down further eventually, I think it's a good time to start adding a little bit. If you do that, that's up to you. This is not a trade recommendation. As such, it just fits my personal strategy. Also consider that we have now reached those previous swing lows. Yeah, so they could provide some additional support. There was also resistance exactly here around 63,290. Now we haven't touched it, but if you want to wait until it gets there, fair enough. Sometimes they turn a bit early. But yeah, I mean, there is no evidence for a bounce. That's the thing. So it might still go a little lower. And I will buy a little more if we go lower. That's the thing. So I keep it small at the moment. And the situation hasn't changed, however. I'm considering this, as I said, an ABC structure. It might form a zigzag. It could also form a flat correction. Corrective patterns can take different shapes. That a B wave overshoots can happen. Less so in a wave 2, however, because wave 2s are typically characterized by deeper pullbacks. And yeah, let's say overshooting B waves are more often happening in a fourth wave than a wave 2. So I'm primarily watching for a less strong B wave, but bear in mind they are very difficult to forecast. At the moment, it's best to focus just on the support area. And it is clear, it's been on the chart for a few weeks now, so at least a week. And it's a bullish market as long as we're holding 56,775. Before I forget, tomorrow, probably tomorrow, maybe Saturday, I'm going to send out the next newsletter, the MCO weekly newsletter. You can sign up in the description. There's a link for the free newsletter. If you go to the website, you can do that as well. Then you will find the newsletter in the resources section. Click on newsletter. You can sign up with this form. Again, it's free. There's some chart analysis in there, chart links, different markets, all sorts of stuff. So, but that might come out tomorrow. So you might want to check out if you want to sign up. But what if we go down just straight? You know, nothing is moving in a straight line, but the next support below 63,290 is 61,314, which is when I would probably add a little more, you know, and then we'll see how it goes. That's at the moment the situation on the Bitcoin chart. So still a bullish market. Yes, we're going down. That's not bearish. That's just a pullback. We get lower prices. Can I promise that the yellow box holds? No, but you know, it's not a concrete floor. It's just a support area. But it's all about reward and risk. It's a simple math exercise, not necessarily easy from a psychological point of view, because we don't want to buy in a wave 2. We don't want to buy in a wave 2. We are human, you know, psychology, you know, you don't feel like buying right now, do you? So, but it's about reward and risk. It's a simple math exercise, reward and risk. The lower we go within those defined parameters, the better the reward to risk ratio. That's the update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.